Hello and welcome to NDTV Profit. You're watching this special show on monetary policy. The Reserve Bank of India today kept the repo rate unchanged at 6.5%. This was through a 5-to-1 voting that happened at the Monetary Policy Committee. The committee also pegged the FY25 growth or GDP growth at 7% and the CPI for FY25 at 4.5%. And joining me today is Dinesh Khara, who is the chairman of State Bank of India and one of the largest bankers in the country. Mr. Khara, thank you very much for joining us on NDTV Profit. My first question to you is, sir, what is your assessment of the commentary made by the governor?
First of all, thank you very much for having me on your channel. Well, I think as far as the policy announcements were concerned, it was more in line with the expectation. Interesting thing is that RBI has retained its inflation projection for financial year 24 at 5.40%, more so with the quarter 4 at 5%, which was earlier at 5.2%. So it's a very clear reflection that inflation trajectory is moving downwards. And the other interesting part was that the financial year 25 real GDP growth is expected to be 7%. And there is a very strong demand which is seen on the household consumption. And the fixed investment climate remain quite bright, owing to essentially the private capex cycle. So these are some of the highlights, and of course there are some concerns relating to system liquidity, but RBI has been very actively managing the liquidity through the main and fine-tuning the repo operation. So I think the governor is quite cognizant of the ground level situation and is ensuring that there should be enough liquidity in the system on an ongoing basis, which will certainly lead to a much better situation as far as the interest rate market is concerned in the money market.
Sir, for a layman, do you think that there is a long wait for rate cut now to happen? Earlier it was expected by the end of the year. Now it seems that it's been pushed to the middle of next year.
Well, I think MPC is very clearly focused in terms of ensuring that the inflation should come within 4%. But the kind of trajectory which you are seeing, there is a possibility that we should actually get to see the rate cut maybe in the second quarter of the next financial year or the third quarter. This is what my broad expectation is, and much of it will depend upon how the economy evolves over the period of time.
Sir, the governor made it a point to mention that the transmission of rates are yet to take place completely. Why do you think there's a transmission is so slow to happen?
Well, it may differ from bank to bank. Invariably, the repo rate transmission and also the pricing dynamics of the banks will also have some kind of a difference, because when these banks are lending for various risks, so there would be some kind of a risk premium also. So much of it will be the decisions taken by the ALCO and the credit committees. So that is one of the reasons why perhaps this may not be seen in toto, but nevertheless, this is more of an indication which is used for arriving at the interest rates.
For a consumer, sir, who is looking at borrowing from the market or from banks like yours, does he need to wait a little longer for the turnaround of the interest rate cycle? How does he look at this entire, policy from his point of view? And if he's holding a loan, how does he go about doing, changing his loan or loan rates?
See, if you really look at it, when it comes to interest rate cycle, it always keeps on changing. So I think much of it is the consumer's preference for raising loan and acquiring the asset. And if at all you will look at mortgage loan, which has got a longer term, which is generally taken for about 15 to 20 years. And there maybe in the total lifetime of the loan, there would be 3 cycles. So I think perhaps timing the market for as far as the interest rate is concerned is not a good idea. If at all the customers feel the need for acquiring an asset, variation will not be really much, but yes, of course, they can take a call depending upon their felt need and accordingly pursue the purpose for which they are intending to raise the loan.
You mentioned that the transmission depends upon bank to bank and how their committees decide of putting across the rates. In your opinion, as a banker, and you've been seeing this across the system, uh, what is the amount of transmission that needs to take place to for the governor or for the Reserve Bank to fully say that okay, the transmission has happened?
Part of it will also be the composition of the liabilities, so there cannot be any um, one size fit answer for this question.
But if you were to put in a finger on this, okay, will it go up by 25 to 50% depending upon the asset liability mismatch or the system as a whole? How do you see this? What is the extent of rate that can go up from now to say the second or third quarter of the next financial year?
I think if at all I will look at our own assessment, we don't have much of elbow room left. A small bit of elbow room is certainly there, but we are very cognizant of the fact that if at all we have to underwrite the best quality of assets, so we have to be mindful in terms of the interest rate which we will charge.
Sir, you initially spoke about the liquidity issue, which is that the system is, you know, there is a crunch of liquidity. Means there has been a lot of operations by Reserve Bank of India through VRR or VRRR, which is coming in based on how liquidity is moving. How do you see liquidity moving in the next 12 to 18 months? Do you see that tightness to continue?
See, part of it will also come from the fact that how I mean, full budget when it is presented, how will it look like, and also it is also a function of the cash and bank balances of the GOI with the RBI, and also I mean around the time of the advance tax invariably there is a system level liquidity issue. So I think there are multiple factors. So I think the way RBI has been acting all this while and ensuring that there should be adequate liquidity, I think this practice will continue, and they will certainly ensure that there is adequate liquidity to ensure that the growth ambitions of the economy are not constrained.
Sir, as a banker, do you see deposit rates to go up from here on?
For the time being, my sense is that it has already played up. Whatever deposit interest rates are to go up, and if at all inflation trajectory is expected to be soft, then I don't think it should go up.
And and what about loans, fresh loans which a consumer may be taking, whether for home or for personal? Do you see that the fresh loans will come at a cost or higher cost from here on?
I think much of it is depending upon the kind of the credit risk premium which banks will be charging, but otherwise the base seems to be more or less stable.
Sir, how do you look at the entire scenario given the kind of liquidity which is there and the kind of cycle which is playing out for the companies who are raising funds for either for capex or for the working capital? Do you see that there is going to be a cost to them going forward?
No, I don't think so, because we are very clearly seeing that. See, these costs are not going to very significant change. So much of it depends upon the opportunity which the private sector investors are looking at in terms of the returns which they will generate. So these costs are not as significant. So I think there's not a deciding factor per se, as far as the fresh investments are concerned. Fresh investments are a function of the way economy evolves, the way the demand pattern is seen. So those are the guiding factors.
Ankur, have you seen private sector stepping up on capex, and have you seen more, dispersals happening in this regard?
Yeah, in fact, when we looked at our December quarter numbers, we have seen that the capacity utilization has improved, and even the facilities are the unavailed limits have come down. So and also when it comes to the pipeline, we have got decent pipeline with us, and a significant portion of that pipeline is coming from the private sector.
What is the kind of credit growth that you see, sir, for FY25?
Well, 25 will be a function of how the economy will look like, but for the year 24, yes, we are quite confident that we should be closing at about 14-15% kind of a growth.
Sir, at 7% growth, which has been pegged by the by the governor, how do you see credit growth functioning in that sense?
I think it should be more or less the way it has grown this year.
Okay. I just also wanted to understand your understanding, because the governor set up the entire thing saying that there is a global, uh, factors at play. There is some domestic factors are also at play there. What is your assessment of how they are going to, help, more from and influence the way the growth is going to happen, or the way the inflation trajectory is going to happen, because there is an election which is coming up, there is uncertain rainfall which may come in, there is already 2 wars and global uncertainty because of that, which could create an issue. How do you assess this entire situation?
Well, of course, there are many variables, and the better part is that Indian economy, to a greater extent, is uh, dependent upon the domestic demand. So I think, and also there is adequate supply within the economy. So in many respects, economy is not as much dependent upon the global situation. So in a way, that's a blessings. And of course, there are geopolitical tensions which certainly impact the trade position of the global trade. So our share in the global trade, how will it really impact? Probably we'll have to wait and watch. So as far as, but economy to a greater extent is internally focused. So I think more or less, as far as the larger part of the economy is concerned, it should not get much of effect.
Sir, just to clarify, you said that you expect the rate cycle to reverse by the second or third quarter of the next financial year. We are talking about December 2025, right? Means that's what you're
Yeah,
looking at.
October, December
Oct-
25.
October, December 25. Thank you, sir. My final question to you is on the fintech regulation, sir. There's been a lot of talk on that which has happened. In fact, in today's RBI's conference, a lot of time was spent on that. How do you look at the fintech regulation? Should it be aligned to the regulations which are at par with banking institutions or banks and NBFCs?
See, financial sector across the globe is tightly regulated. If at all fintechs wants to get into financial sector space, so then they have to be regulated the way the other financial sector players are regulated. This is what my sense is, and because there are always transmission challenges, so that's why all the players in the financial sector and the ecosystem should be equally regulated. Should be equally tightly regulated.
Sir, are you in touch with Paytm for transfer of accounts and others for the?
I normally don't comment on any specific issues in such matters.
My only question was because there's a systemic thing which been talked about, that the transfer is going to happen. So is it going to be smooth, and are you in touch with them? That's the reason I
No.
asked you.
I have already made a mention that we are willing to offer our services to the merchants who are dealing with Paytm. We would be more than happy to offer them the payment system services, and that remains our stance.
Mr. Khara, it was a pleasure talking to you today. Thank you very much for joining us on NDTV Profit.
Thank you. Thank you very
Thank
much.
you.